Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the trading channel. First, we now have the new quarterly open. And from here, we basically need to observe the lower timeframes and see which of the scenarios becomes more likely over time. There is one scenario where price just shoots straight up, but in most other cases, we will more or less stay inside this higher timeframe range before the next bigger move. For the bullish side, that would mean a move up, and for the bearish side, a move down, maybe even with one more bigger wick to the downside. We don't know yet based on the 3-month chart. What is important now is that the quarterly low has been established with the close. That is currently our overall low. So if price comes back down to that level, I will be looking for a reaction. On the upside, the key area is the quarterly SR level between 82K and around 94K, which is acting as resistance right now. So these are the two higher timeframe areas I'm focused on, the quarterly low and the quarterly resistance zone. Since the quarterly just opened, this can of course take time, and we will come back to this chart later. Now moving to the next chart, the data points. This is where Bitcoin has historically formed bottoms, the power law, production cost, and another metric. These levels are not aligning with the usual 80% drawdown that we often see in bear markets. The reason is that this cycle did not have a typical top from a data perspective, and because of that, we are reaching these levels earlier in time. So for me, it's again a step-by-step approach. I trade the first area and have already bought some spot in this region. If price moves lower, then so be it. I will repeat the process at the next levels. We also had a signal flashing for this range, which is currently on pause. Hopefully not for too long. But right now, I'm not using it as confluence because it's basically 50-50. That means I continue trading the levels as before, but without that extra confirmation. And because of that, I also stay open to lower levels. It doesn't have to happen, but I stay flexible. If the signal flashes again here, then things change. Now looking at the data levels themselves, production cost is moving in a range with ups and downs while the other metrics are rising consistently. So the more time price spends moving sideways, or just spending time in general, the more likely it is that even if price moves lower later, it might simply meet those rising levels at higher prices. Now let's move to the yearly Fibonacci time and price chart. Here we were specifically watching the alignment of price and time when price meets a key level during a key time window. And that's exactly what happened here at this support level. I updated this in Discord and Telegram beforehand, pointing out that the time window was coming up and that we should expect a reaction or even a reversal. Of course, whenever price hits support or resistance, we still go step by step and trade probabilities. Sometimes it fails, but very often you end up on the right side. For me, I was looking for longs, and that's exactly what we did. We longed this area. It was one day before the Fibonacci time window, and then on Sunday, one day after, we got another SFP where we added to the position. So for now, that trade is playing out nicely. However, we also have this green area where I said I would like to see the range break. So within the next 1 to 2 weeks, we should see whether we get a breakout or if we continue ranging. If we don't break, then we could simply continue ranging here until the next time window, which would be around May. That basically means price is now at a decision point and will likely choose a direction that it follows for some time. If we see a reclaim of the local resistance, then I expect continuation toward the next higher areas. Best case, we align resistance with time again. That would be a strong area where I would look for hedges. On the downside, I would first look for an SFP. Only if that fails and we get a breakdown would I start targeting lower levels. Right now, price has bounced exactly in the planned time window from our level of interest. And most importantly, we actually traded that move. Locally, price is now hitting the next resistance area, which is the current level to watch. We need to see whether we get a rejection or a reclaim from here. Personally, I'm not trading this area as I already took some partial profits before reaching this level. With that, let's now take a look at the new monthly stats for April. Looking at the monthly statistics, which by the way you can get access to, a copy of this sheet, and I also show you how to build these stats yourself, all you need to do is join the Patreon. There you'll get the first part of the strategy video and the journal that we started building, where you can properly test your strategy instead of guessing like most people do. Because many traders say things like, "This setup always works," but without testing, that means nothing. Here you can backtest and forward test your strategy so you actually know what works and what doesn't. So don't waste time guessing, test it. Now, back to the monthly stats. For April, we can see that historically it is about 66% bullish versus 34% bearish. But what's even more important are the average moves and the timing. On average, the monthly move is around 7 to 8%, although it varies a lot, either very small moves or larger ones around 15 to 17%, which brings the average to that 8% zone. For bullish wicks, we have an average of about 15%, which is quite large. However, this is skewed by earlier years where we had extreme wicks, for example, one around 46%. So the median, which is more realistic, is around 7%, and that's a more reliable expectation for bullish wick formation. Looking at bullish monthly closes, the average is around 22%, which is strong. In between, we also have bearish wick formations averaging around 7 to 8%, meaning that in bearish months, the top typically forms in that range. Again, you can see variation between 2% and 10%, so the average should be treated as a zone, not a precise number. Now, timing-wise, we can see that lows are typically formed within the first 2 weeks of April on average. Interestingly, there were even cases where the low formed on the very first day. This actually happened 4 times in a row, which is quite notable. But overall, the average still points to the first half of the month for bottom formation. For highs, they tend to form in the second half of the month. So the ideal scenario, based on statistics, would be first a low forming early in the month, followed by a move toward the highs later. However, we always have to keep in mind that this only happens about 66% of the time. In the remaining 34%, we see downside moves instead. So now let's see where these statistical levels are sitting on the chart. Here we have our range and the drawings for this range, where I'm interested in taking trades. The first area was hit after the rejection, and that's exactly what we traded. If that level had failed, the plan was to look for the next levels below, but the initial focus was clearly on this first area. One of the reasons for that is also sentiment. A lot of people were bearish and expecting a breakdown, so they were mostly sitting on the sidelines or chasing short trades all the way down. And maybe one of those shorts will eventually play out. But what we often see in order flow is that people keep shorting and getting stopped out. So that behavior is very visible. Anyway, what we're doing now is observing the move. The plan was to trade that level, which we successfully did, and I hope some of you caught it as well. The sentiment was perfect. People expecting lower prices, while we were hitting key price levels at the right time window. That extra sentiment was basically the cherry on top. Now it comes down to managing the trade and being ready for potential moves into other levels. For that, we look at the monthly stats and what's possible for this month. The bullish average wick, which is slightly distorted by older data but still possible, would actually go below the range low. That would match a scenario where we get an SFP of the low. So we know it's possible, but again, we go step by step. The next important level is the bullish median wick, around 6 to 7%, which aligns roughly just below the mid-range. This area also overlaps with the bearish monthly average close, meaning in a bearish month, price often closes around this zone. These areas were already on the chart before, but now we also have the monthly statistical confluence, which I personally like a lot. It gives me the extra confidence to trade these levels. Now, looking at the bearish scenario. On average, bearish months still see a move up of around 7 to 8%, bearish wick, followed by rejection and a move back into the range. That would mean price could push up, reject, and then spend time between the mid-range and the upper part of the range. Basically, another month of ranging. So this upper area is definitely a zone of interest for taking profits on longs, whether the move starts from here or from lower levels. Time-wise, this aligns very nicely with our daily cycle time window. So if price moves down first, I would like to see the next low form within that same area we discussed before, now with added monthly confluence. So overall, the plan remains the same. Trade these levels within the time window, and only if the range is lost do we look lower toward the next data-driven levels. Now for the upside. We have an average bullish move of around 22% for April, which is quite strong. If price wants to reach those higher levels, it would most likely require a breakout, something similar to what I drew out before. That kind of move is usually impulsive, with many people shorting into it, getting stopped out, and effectively fueling the move higher. It happens very fast, often before people can react. Then they try to short the retrace because they missed the move from the lows, hoping for a pullback. But instead, price just continues higher, giving no clean entry and stopping them out again. That's not just an opinion. That's something we consistently see in order flow. So now we have a clear structure. We know the possible statistical levels and the timing. On the downside, the first key area remains the mid-range, where we could see a wick into it, followed by continuation higher. In a more extreme case, we could move below the range, but that scenario is influenced more by older Bitcoin data, so the primary focus is still the mid-range. On the upside, I'm looking toward around 74K, and if we break higher, then the next target becomes the higher timeframe area, the quarterly resistance zone. Of course, there are levels in between. If I switch on additional levels, you can see support below the range and resistance above, including a nice daily order block. If price moves into that area, we need to see whether it breaks through or gets rejected. From there, we could either see a reclaim or a move lower for a backtest. But that's already thinking too far ahead. As you know, I focus on the next actionable move, not planning 10 steps ahead and changing scenarios every day. That doesn't work for me. I prefer to define levels and work toward them step by step. So for now, I remain focused on the mid-range area, even if we get some local deviations or wicks below it. Only if that level fails do I look lower. For the upside, I continue managing my long positions and wait for better levels, instead of jumping in and out within the lower timeframe chop. And with that, let's move on to the local levels and the trade. Here we have a few more levels. On the lower timeframes, we can clearly see that price came down into support, formed a range, and then swept that range, all within our Fibonacci time window. This was all planned ahead for that scenario. And now, of course, we see some news coming out, and people try to give this move some kind of meaning. But the reality is, price is not choosing direction because of news. Most of that is already priced in. Market structure and direction are usually determined well before any news events. What we're seeing here is part of a much bigger picture. For us, it was simply about repeating cycles, like the yearly Fibonacci timing and the quarterly time frame, which are driving these moves. Now, the long we took from this area already hit TP2 yesterday, so it's now a safe trade with secured gains, even if price comes back to the stop loss. And if we see another SFP or another move into lower levels, I would still be open to taking another long. If you remember, we had a plan. If this level gets lost and the trade fails, then the next area of interest would be below these lows. And now, we also have some monthly averages sitting there, adding extra confluence. The only thing to keep in mind is that price would need to reclaim that area again. If that fails, then the door opens to the range low, because price would reject from the mid-range and the value area low of this range. So you can see how important this zone is. It's a key area that shows strength if it holds or weakness if it gets lost. For me, it's clearly an action zone, and that's exactly what we traded. The trade is now risk-free with secured profits. For the next TP, I'm aiming at the range high. After that, we'll see. I'll try to hold as much as possible for higher levels, but of course, I also want to pay myself at important areas. For today, I'm watching whether price can reclaim this level. It's possible because the average move for today sits above it. But we still need to see if we actually get a close above it. If we do, then the door is open for a move back to the range high. If it fails here, then this becomes an area where we might see more chop, and we may need to wait a bit longer for the next directional move. For me, there is no new action here right now. The only new long would come if my trade gets invalidated. The same applies for shorts. I would need price to move higher first. Now, looking at the lower time frame, on the 1 hour, momentum remains up, and price is currently inside this SR level. Also, today's open range sits within this area, so it's quite straightforward. As long as price stays above it, I'm looking for higher prices. We are also above the Monday high. If you remember, I explained that the Monday range often sets the base for the week. So as long as price is above that range, I'm looking for continuation, at least toward the average move for today. For my next TP, I'm aiming higher, and since the trade is now risk-free, I can hold it toward those targets. If price starts losing this area, then we have the average loss level for today below. But for me, that's not an area I want to trade. I would simply wait and see what price does in that chop zone. So with that said, if you followed along, happy days, enjoy the profits. The next action is either higher for TP or lower for the next trade. Until then, I recommend patience. Wait with me for the next areas of interest. If you missed the move, it's better not to chase it, unless you have a clear plan. For me, it's waiting time again. Most of what I do is waiting. It always depends on the strategy and when it triggers, but as you can see in this range, all I did was wait for levels and execute against the crowd at the right time. And that's what gets rewarded. With that said, I hope you have a great day, week, or life. Hope this was helpful, and I'll see you in the next one.